when US institutions dump futures and buy cash aggressively, but Asia ignores the bounce and crude crashes again. Are these two different markets? When US growth sectors bounce hard, but energy collapses 276 base points and utilities stay down. Is this a rotation or capitulation? When all Asia markets close lower despite US strength, are Asian institutions selling into US rallies or have they lost conviction? When the entire US yield curve collapses while stocks bounce hard, is this growth bottom or recession signal underneath the rally? When Europe and US bounce together but Asia holds down and crude stays in free fall, which signal is real, the rally or the breakdown? Asia is minutes away, 5 signals, everything you need before the first bell. This is the Asia first look, let's get into it. S&P 500 closed up 120 base points. Nasdaq Composite closed up 152 base points. Dow Jones closed up 179 base points. US institutions aggressively bought into dip overnight. Cash closure was strong conviction, but here is what happened in Asia. Nikkei futures implied down 175 base points. That's a break. Tokyo rejected the US bounce. Korean futures implied down 55 base points. Seoul also sold into US strength. Hang Seng futures implied down 89 base points. Hong Kong ignored the US rally. Shanghai Composite futures implied down 10 base points. All Asia markets closed lower despite strong US cash. That's the first signal institutions disconnect. US bounces and Asia sells. Crude oil selling 941 base points. Overnight is the confirmation signal. That's a crisis move. Two consecutive days of crude collapsing at the same level tells you commodity markets have repriced growth expectations fundamentally lower. The magnitude is enormous. Crude lost all of the recent relief rally in 2 days. That's not tactical selling. That's a structural repricing of demand. Which sectors actually sold in Asia while US brought? The divergence is the real story. That's what sector leads confirms. Technology ETF up 153 base points. Semiconductor index up 243 base points. Semiconductors bouncing harder than broad tech tells you semiconductor dip buying was aggressive. That's a tactical relief. But energy down 276 base points. That's a energy collapsed hard despite crude falling to crash off for hours after US Open. That tells you energy equity sellers are ahead of crude markets. They are not following crude. They are leading the breakdown. Financials up 77 base points. Financials bouncing tells you rate expectation stabilized. Brief from the yield collapse. But healthcare up 149 base points. Healthcare bouncing hard tells you defensive positioning is real. Utilities down 41 base points. Utilities breaking tells you the yield collapse is not attractive to institutions. They are selling bonds, not buying them. Materials up 25 base points. Industrial select up 182 base points. Industrials bouncing hard on the dip, but materials barely moving tells you industrial dip buying is tactical, not a conviction. Real estate up 153 base points, bouncing hard, but copper down 141 base points. Gold down 157 base points. Commodities selling while equities bounce tells you commodity markets don't believe in the relief. Asia needs to watch which bonds persist. Asia's regional picture shows coordinated selling into US strength. Nikkei futures implied down 175 base points. Japan is a leading the selling. Tokyo saw US crash strength and sold hard. That tells you Japanese institutions believe the US rally is execution relief, not recovery. Korean futures implied down 55 base points. Korea selling but less than Japan. Seoul is more cautious than aggressive Tokyo. Hang Seng futures implied down 89 base points. Hong Kong selling with Japan. Hang Seng Tech futures implied down 97 base points. Tech positioning breaking with the index. Taiwan futures implied down 327 base points. Taiwan breaking hard tells you semiconductor supply chain is losing conviction despite semiconductor index strength. Hang Seng financial futures implied down 79 base points. Hong Kong's financial sector breaking. Shanghai Composite futures implied down 10 base points. China is barely selling. Shanghai's light selling despite developed Asia dumping tells you Chinese institutions see Asia selling as a capitulation, not conviction. Singapore index down 27 base point. Southeast Asia light. Australian dollar down 27 base point. Chinese currency up 10 base point. Yuan weakness tells you China is capital is not coming to the deep. Australia weeks tells you commodity reliant regions do not believe in the relief. Volatility index down 256 base points to 17.48. Fear collapsed, but the move is mechanical, not conviction relief. 10-year treasury yield down 146 base points to 4.24. 5-year treasury yield down 192 base points to 3.83. 30-year treasury yield down 89 base points to 4.88. 13-week treasury yield down to 28 base points to 2.36. The entire long yield curve is collapsing sharply. That's not tactical, that's a flight to safety into duration. Institutions are selling stocks and equities to buy bonds. That tells you bond market sees recession underneath the stock bounce. US dollar index up 13 base points. Yen up 6 base points. Euro down 36 base points. British pound down 29 base points. Safe haven currencies mix tells you institutions are rotating into US rate safety but not committing to strong dollar. That's a recession fear, not a growth confidence. Crude oil down 941 base points for two consecutive days. Gold down 157 base points. Copper down 141 base points. All commodities selling while bonds rally tells you commodity markets see recession ahead. Asia opens into recession signal, not growth recovery. The stock bounce is execution relief. The bond collapse is a reality signal. Nikkei futures implied down 175 base points. Is Japan's selling conviction? Tokyo saw US strength and sold hard. If Tokyo opens and extends this selling, Japanese institutions are leading regional breakdown. If Tokyo opens and bounces, Japan finally capitalization to the dip. Japan's execution determines regional outcome. Watch Tokyo's opening volume. If heavy on selling, institutions are exiting. If light overnight selling was just positioning. Korean futures implied down 55 base points. Is Korea's cautious selling? Korea is selling less than Japan. If Seoul opens and stabilizes, Tokyo's breakdown. Korea's cautious holds the region. If Seoul extends lower, the regional breakdown accelerates. Korea's pivot point is key. Shanghai's composite futures implied down 10 base points. China is barely selling. If Shanghai opens and extends, China strategic entry point is coming. If Shanghai rolls back to negative, China's cautious deepens. Hang Seng futures implied down 89 base points. Hong Kong bounces or breaks with developed Asia. Crude oil down 941 base points for the second day. Must stabilize or Asia selling accelerates. Watch crude momentum. If crude extends lower, commodity contagions pursue or growth dependent regions. That's a watch signals pivot point. European strength versus Asia selling versus crude crisis. Which one wins? The signals are set. Asia has not opened yet. The first move always tells you more than everything you just heard. Japan opens first, that's your signal. Shanghai's first minutes, that's your confirmation. Watch which one the markets humbles from your own view. Watch the Japan, then come back and drop it in the comments. Did it deliver or did it surprise you? Join the community where market minds speak. I am James. See you in market.